The markets take a huge tumble on Friday. The NASDAQ is down almost 5% in one single day. That was the biggest red day in about a year. What's up, everyone? Hope you guys are doing well. Today, we're going to go over the weekly recap and a weekly outlook of what to expect coming into next week. There's a lot of volatility. We ended up dropping, as I mentioned. Let's head straight onto my trading calendar to show you guys my trading statistics for this month so far. Up around $24,000, trade win percentage 57%, profit factor 3.22. Day win percentage 100%, average win to loss ratio of 2.42. So as you can see here, really it was made up of the first 2 days of the month. The last 2 days of the week, Thursday and Friday, I wasn't really able to capitalize as much as I would have liked it to on the downside opportunities that I've had. But I definitely was able to kind of flip my bias. We talked about it on Wednesday. That was the first kind of sign of weakness in the overall markets. And we end up tumbling Thursday, Friday, pretty big red day towards the downside, coming into, of course, the SpaceX IPO on Friday of next week. So as you can see, the markets are dropping. There's going to be a SpaceX IPO, about $2 trillion valuation. And of course, we'll see how that impacts the market because that's going to be fairly big. But with that being said, before we hop onto the charts, let's talk about some of the things that we have coming to next week. As I mentioned, we have the SpaceX IPO on the 12th, which is going to be very key for the overall markets. That is something to keep an eye out for. Some other things to keep an eye out for as well. We have core CPI that's going to be on Wednesday at 8:30 a.m. Eastern Standard Time. And then on Thursday, we have the core PPI plus the unemployment claims. And then on Friday, we do have the consumer sentiment as well. So what were some of the things that we had last week? We had AVGO earnings, which kind of initially started the rally towards the downside, down about 15%. And then the market started tumbling. Plus, we're just kind of overextended on the higher time frames. But we're expecting a pullback on the major indices, but we ended up dropping a lot more than I think most people expected. So we'll go into the charts here in a second. As for some other things to keep in mind, we have a couple more earnings. Oracle is going to be reporting on Wednesday. That's something to keep an eye out for. And then that's really the major earnings that we have this week. So before we head on to the charts, I do want to mention that we have a huge announcement coming out. We have a full playbook that we're going to be releasing to you guys for completely free. It includes a 3-hour full A to Z course that has never been seen before. We also have a full ebook that took over a year to make that is going to go over entry models, strategies, criteria on exactly how to become a profitable trader. We're also going to have a private live masterclass for you guys and follow that up with live trading for some of you guys that are interested. So if you guys are interested, make sure to sign up for the link in the description below. As I mentioned, it is completely for free. The ebook is going to be releasing on June the 8th. So as I mentioned, it's the first link in the description below. So make sure to sign up for that. Hope to see you guys all there. Let's now hop straight onto the charts to talk about what to expect moving forward, or first starting off on the weekly time frame. So this is the first red week here on the SPY. We hit our all-time highs and we ended up closing bearish on the week. If we're talking about the location, as we mentioned, we're still bullish on the weekly time frame scale. But this was the first week that we put in a bearish candle. Similar thing on the QQQ as well. So if we're looking at this on the weekly time frame, where is our high or low on the weekly? The weekly time frame, of course, could pull all the way back down into that 690, and we'd still be bullish for continuation towards the upside. Obviously, we would never want it to pull back down in towards the 690, or right, we'd be in a daily downtrend. But if we go into the daily chart, what is the key levels that I have for the SPY? So as you can see, we're building up higher lows very nicely. The key levels that we had on the SPY for the daily higher low was this 748. We wanted to see this level hold for continuation towards the upside. Now that we broke underneath our 478 with a strong candle close, the next level that we like to see hold now is the original area which we ended up bouncing off of. So this was our double bottom. So on the daily chart, we're still bullish as long as now we can maintain our 732 for this continued pushback towards the upside, right? We can create some sort of potential kind of like head and shoulders, right? As long as we maintain above your 732, right? We can be looking for continuation back towards the upside if we can get above this 748. What we don't want to see here now in the markets is if we come back up, let's say we bounce off the lows next week, the key area is going to be the 732. We come up and then we kind of reject this area and we break back underneath the 732. That would kind of validate this head and shoulders for a potential pushback towards the downside. So the key level coming to next week is going to be that 732. We're going to be looking for a bounce off this area for a pushback towards the upside on the SPY. If we go on to the hourly time frame, you can see we are in a very clear now downtrend once we broke underneath that 750. You can see this was our break and retest level. Price broke above, retested continuation, another retest continuation towards the upside. But once we broke back underneath the 750 here on Friday, that was a sign that we're most likely going to continue towards the downside. This was a lot bigger of a sell off, but now we're right back into a key level support, which happens to be that 732. So coming to Monday, the key levels that we're going to have marked out is going to be that 732. We want to see if buyers can step in for a potential move higher. It does seem like if we break underneath that 732, hold underneath, we can see a little bit more downside here on the SPY coming to next week. So the game plan here now, as you can see, breaking underneath the 9 EMA, breaking underneath the 20. This is the first time, right? We're showing some weakness here on the markets, right? You can see the 9 EMA held all the way towards the upside. Now we broke underneath it with a strong candle close. This is a signal that the markets are starting to slow down. This doesn't mean we can't just bounce and gravitate right back up and towards our all-time highs, but now we want to be a lot more cautious on any sort of swing positions that we do have because now the overall indices are breaking below the 9 and 21. If we go on to the ES, as you can see, the first sign of weakness as well, right? Pretty strong break. Once we broke back underneath that 7,500, that was a key level here. That was a higher low being built as well, really straight move down in towards that 73.50. So this is the exact level we want to see ES bounce, right? It can undershoot it, right? Reclaim, potentially move higher, but this is kind of the level we want to see hold coming into Monday. If we can hold this level, we do have a little bit more room towards the downside and we can still set a weekly higher low for continuation. But right now, as I mentioned, the daily now, this is the first bearish candle. I think we can all agree on the overall markets, right? This is the first sign of weakness here on the major indices. If we go on to the QQQ, similar thesis here on the Qs, really nice push towards the upside. This is the first bearish weekly candle that closed underneath its previous candle low. As you can see here, we end up putting in a bearish candle, but that was more of a neutral close. In this case, this was the first candle that broke underneath its previous candle low. So a sign of a potential shift in momentum. If you go onto the daily chart, as you can see here, the key levels that we have marked out for a daily higher low was actually this 725. So we're expecting a pullback coming into last week, potentially down in towards that 725, but no buyers stepped in here off that 725. And now we're coming all the way back down into that 700. So coming to next week, we want to see that 700 bounce for a push back towards the upside. If we go on to the hourly time frame, you can see really strong sellers ever since we kind of broke underneath even this hourly pivot high, which was at 736. There's room down in towards our 720, but really no buyers stepped in whatsoever, completely broke underneath that 720, and now we're going to push all the way back down in towards our 700 here on the higher time frames. So as I mentioned, moving forward, we're going to now be open and playing both sides here on the markets. As you can see, once we're riding that 9 EMA, we're just bullish and now we're going to look for continuation. Ever since now we're closing underneath, we can be looking to trade upside and the downside. So this is really going to be good for day trading. Swing trading, of course, as I mentioned, is now going to be, we're going to be a little bit more patient on the swing trades because we're now breaking underneath key moving averages on the SPY and the QQQ. So moving forward, right, we're going to take it day by day and we're going to keep an eye on the reaction off key levels. But as for a weekly outlook that I talked about, I'd really like to see this level hold, which is our 690. And if we go into the daily chart, right, very clear level. This is the area that we bounced from last time. So 690 bounce for a continuation back towards the upside. If you go into the SMH, similar thesis here, breaking underneath key levels on Friday. Now we're coming back. We're still building up a daily higher low here on the SMH, but now the momentum has definitely slowed down. Now, most likely, we're going to come back, consolidate, potentially come all the way back down towards that 530 and push back towards the upside. If we're looking at this on the weekly time frame, we're still very much bullish, but as you can see, pretty big upper wick, pretty weak candle close here as well. We can now pull back inside of this consolidation, and now we're most likely going to base for a bit before that next leg towards the upside. So this is what we have on the weekly time frame scale along with the daily time frame as well. Let's go over some of the tech names that we have. A lot of these tech names now are dropping. So whenever the SPY Qs is going to drop around 4%, all these tech names are going to drop a lot more as well. So Tesla, nothing to really talk about here. We'll keep an eye out on this one coming into that SpaceX IPO. But if you're looking at this on the daily chart, really nothing is to be, really there's nothing to take a look at here on Tesla. 450 is going to be our key level. And now we actually recently broke outside of this trend line here and breaking towards the downside on Tesla, 400s. So pretty nice move towards the downside here on Tesla today. As for Nvidia, this one key level that we have marked out was that 210. Nice bounce off that 210 last week for continuation, ultimately rejected, and now we're actually breaking underneath this 210. So on the weekly time frame, Nvidia is consolidating more than anything. Pretty big weekly candle close. So not as bullish here on Nvidia. The key levels that we want to see reclaim is back above this 210 area. So if you want to see now reclaim back above for continuation, still technically building up a higher low here on the daily. So if you can reclaim continuation back towards the upside, but now we want to be a little bit more cautious on most of these tickers. AMD is still very bullish. So AMD, as you can see, building up higher lows. We're now going to come back to the area that we broke out from, which is that 460. So for AMD coming to next week, we'll keep an eye on a potential bounce here off that 460 for continuation back up and towards that all-time highs and above. If we kind of undershoot it, we can still be bullish here on AMD as long as we maintain above this daily higher low, which is our 400. So AMD is going to be one of the main watches, of course, for continuation back towards the upside. We're going to now be focusing on names that are the strongest. So once the markets pull back, the names that are holding up are going to be the first ones to lead the markets back towards the upside. As for Apple, this one's holding up very nicely here as well. Key levels that we have marked out is going to be basically this period of consolidation. If we want to see continuation higher, break above our all-time highs for a push back towards the upside. The daily chart on this one, not really doing too much, really bullish. If you're looking at the hourly, a little bit more consolidation. As for Google, this one's in a very key technical spot. So for Google, keep an eye on this 350. That is our weekly higher low for a pushback towards the upside. Key levels that we have marked out is that 350. So 350 hold for a pushback up in towards that all-time highs. Microsoft, pretty big rejection here on the weekly time frame. So we broke out nicely, but rejected right off that 470. So for Microsoft here now, with the overall markets dropping as well, want to be a little bit more cautious. Our daily higher low is right at this 410. So we need to see that reclaim back above if you want to see any sort of pushback towards the upside. Meta, nice little rejection here on Friday, still inside this range, so not too much to talk about. Amazon pulling back here as well. So a couple names, as you can see, are pulling back with, of course, the major indices. The main thing here is a bunch of the memory and semis are pulling back. The rest of the Mag 7 names, really Google, right? Microsoft, Meta, they haven't even done too much this year. So as you can see, most of these are going to pull back with the overall markets. And then Netflix, of course, a little bit weaker here as well. Let's talk about a few other tickers. AVGO was one of the main names that kind of affected the markets, of course, with earnings. Gap down 15%, pulling back here as well. AVGO underneath that 400. We ended up entering in a short on AVGO. It actually ended up working out very nicely, but it took a lot longer. Underneath that 410 was key for a push towards the downside. But let's look at a couple other setups. Oracle, you can kind of keep an eye on this 200 potential bounce with earnings coming up here as well. But let's talk about some of the semiconductors. So as you can see here for MU, still very bullish on the higher time frames, right? Nice continuation. MU key level is going to be this 800. Let's keep an eye on an 800 bounce on MU coming into next week for continuation back towards the upside. SNDK key level is going to be right at this 1500 for a potential move back towards the upside. We have Intel. This one is pulling back. Key level for Intel is going to be that 100 key psych. Now for Intel, I'd like to see some sort of reclaim setup for a push back towards the upside. If we're looking at this on the weekly time frame, we're about to come into a key area, which is the 9 EMA here on the weekly time frame. If we can base here on Intel, we can potentially see a move back towards the upside, but it is going to take a little bit longer to develop. A lot of these other names, as you can see, pull back here on Friday. So with the overall markets, right, really red across the board. If you look at the heat map, of course, right, you can see basically every sector was red on Friday. We'll give it a few seconds to load up here. So most of these names are red, right? Of course, some of the semiconductors, a bunch of the Mag 7, red really across the board. You have a little bit of some tickers that were green on Friday. So with this being said, what we're going to be mainly focusing on coming into next week is number one, we're going to be open to trading both sides. Right now, we haven't really talked about too much of the shorting opportunities just because the higher time frames has been very bullish. But now we can be open to playing both sides. So day trading with, of course, the VIX rising, that's going to help it out a little bit more. You can see the VIX end up spiking here on Friday, right? It was almost at 15, but now we have a huge spike. So whenever the VIX spikes to 20, this is really good for day trading. When the VIX is low, it's really good for swing trading and, of course, long term. When the VIX spikes, that generally means the markets are dropping, so there's going to be more volatility. And as I mentioned, we can be open to playing both sides on the market. So right now with the VIX rising, right, we're going to be open to playing both sides. We're going to be looking to play the upside and the downside. So it's really just going to be based off of intraday price action. And then once the markets bounce off key levels, we potentially find a bottom, then we can look for a couple swing positions back towards the upside. Yeah, and with that being said, I hope you guys enjoyed the video. If you did, appreciate if you guys drop a like and sub. With that being said, I have a swing trading video coming out tomorrow, so make sure to keep an eye out for that. With that being said, I'll see you guys next week on Monday for the pre-market preps. All right, take care, everyone. Have a great rest of the day. Peace.